Sorry, your voice was breaking up. Was it just me or
No, I also heard it breaking up as well.
Okay. It's better now, by the way.
Yeah. So, guys, should we start?
Sure.
Yeah, great. Sounds good.
Yeah.
So, well, good morning, very early morning, and afternoon and evening, everyone. Welcome to Crypto Tonight, D-Hour Deribit Hour Episode 2, Crypto Derivatives Deep Dive. My name is Yama, and it's my great pleasure to be your host tonight. So tonight is kind of like when London meets New York, hosted by Beijing. Love and peace. I hope we will all stay safe. And so to start with, please join me welcoming our 4 fantastic guests of tonight. Shaun, the risks and product strategy of Deribit. Hi, Shaun. And Leo, the managing director of FBG1. Hi, Leo. And Shiliang, managing partner and CIO of Ledger Prime. Hi, Shiliang again.
Hey, how are you?
And George, and the
Good to be
CEO.
back.
And George, the CEO of BMax Exchange. Welcome, guys. So, first introduction, could you please share a bit about your background? What do you do and what your company does? Start with Shaun, the risk and product strategy of Deribit.
Okay, so Deribit is a derivatives exchange and mainly trading. You've got your perpetuals and future on Bitcoin and Ethereum, as well as options. And it's one of it is the market leader in options space. It's about 80% option, like the share of open interest for Bitcoin and 90% for Ethereum. That was for last month. So it's always quite high up there when people think about options.
Thank you, Shaun. A quick question. Is it new fashion now? Everyone's getting the D tattoo and wearing a pink hoodie in the office.
I haven't yet actually been to the office because of COVID, and I joined. I'm working remotely from London. Mm-hmm. So I can imagine a lot of pink hoodies going on in that office. Yeah.
But when you go to Amsterdam, you have to show us your tattoo and your new pink hoodie. Promise that.
Yeah, it's part of the club. Yeah, join the club with a tattoo and a pink hoodie. I do have my Deribit merch though, my nice coffee mug and stuff like that.
Oh, nice. For the morning coffee. Thank you. Next, Leo, Managing Director of FBG1.
Hey, hello everyone. I'm Leo, Managing Director at FBG1. We have been providing, we are founded in 2015. FBG1 has been providing liquidity services and also asset management solutions to our retail and institutional clients. And at this moment, we have about $200 million worth of digital assets under management. For myself, I got my doctor's degree in stats, and also I've been working in the traditional asset space before joining cryptos in 2018. I split the time between sell side, buy side, FIC research, sales, and trading. Yeah, I'm more like a latecomer. It's only been 2 years in crypto, but I gotta say it's been the longest 2 years ever in my life. So I'm still learning every day, a lot of stuff. It's really exciting to be here, to talk to everyone.
Latecomer, but you already managed 200 million assets. Good.
Not myself, my team actually.
Yes, but still impressive. And I know this is your first video podcast, so we're honored. Thank you. And how's your walking your 2 puppies at Times Square at 3 or 4 a.m.? You still doing that these days?
I try. I mean, I did it a couple of times. Then my parents got really mad at me, so I kind of stopped. Just to become a more responsible person. At these hard times.
Yeah, I think 2 or 3 a.m.
your family, friends. Yeah.
Yes. Funny. Thank you, Leo. Next, Shiliang, managing partner and CIO of Ledger Prime. Welcome again, Shiliang.
Yeah, thanks, Yama. It's good to be back. So I'm the CIO of Ledger Prime. Essentially, we're just a quantitative digital asset hedge fund. Been around since 2017. My team and I come from the traditional asset world, mostly from high frequency trading and derivatives trading. So we've really made a conscious effort from the beginning to really help and grow the derivative space. But yeah, we trade globally, trade more than 700 to 800 million dollars in volume a month, and yeah, still trying to the derivative space. Thanks for having me back.
Thank you, Shiliang. I know you and Leo communicate a lot and trade a lot as well. And what's the topic you guys talk about most?
Mostly just options pricing, but we're both from New York. We've met up for drinks before, so it's we're all quarantined and socially distanced. So it's always good to have another another person in the industry to kind of talk to.
Nice. Thank you, Shiliang. Finally, George, the CEO of BMax Exchange.
Hi, everyone. So BMX was actually founded in 2018 by a group of West Wall Street veterans, including myself. I think it's about 2 years right now. We offer a very comprehensive service to people, including cash trading, spot trading, staking, derivative trading, a lot of services. And myself, I think I came from the traditional finance world, being a trader for the first half of my career, doing high frequency trading in NICAP Blue Group, in Barclays, and later my own hedge fund. I think we share very similar background with some of the guests here. So very happy to chat with everyone today.
George, so happy to finally have you on the show, as we have been talking about it for a long time. And I have a question. Do you know that
Sure.
community here in China, you actually, it's kind of like your name is kind of like associated with a KOL called Caesar Haige. It's very hard to say. It's kind of like a love or something else between you guys. Do you know him?
No, I didn't know him.
Okay, but your name is very closely associated with his name. So probably we can ask.
Really?
That's
funny. Yeah. That's funny.
Yes.
I have to meet him someday.
You must. His name's called Haige. Thank you, guys. So now let's move on to our first topic tonight. What's the dynamic between regulated and unregulated derivatives exchanges, and how do you think this will evolve? Because we know why derivative volumes are so much higher compared to the regulated options market, and how regulation contribute to that. Shiliang, do you have anything to share with us regarding this?
Yeah, absolutely. I think absolutely, you're right. Right now, unregulated futures markets on average make up more than 90% of the market share on any given day, right? And for options, up to the last few months, CME options have gotten because CME options have gotten a little bit of traction, but unregulated options offshore, I don't like to call them unregulated, I like to call them offshore, but generally they've made up an average more than 95% of the global market share, right? Now, regulated exchanges maybe have doubled their market shares in the past year or so, but it's still a ways away, right? At the end of the day, it's just especially from like a KYC ML perspective, onboarding perspective, generally it's just so much easier to onboard with a offshore non-regulated exchange, right? In the US, like CME, if you want to onboard, you have to have an FCM relationship first, which basically essentially eliminates a lot of the ability of retail customers to onboard, or you can have a relationship with like E-Trade or Ameritrade or one of these brokerages, and often that eliminates the ability of offshore retail. And so at the end of the day, all this capital is basically sitting on these unregulated exchanges, and so these prices of these options generally still are dictated by kind of what is happening at these offshore exchanges, right? At the end of the day, it's from a collateral perspective, the trade on let's say a Ledger X versus a CME versus a Deribit, it's almost 5 to 10x more capital efficient to trade on like a Deribit, right? And so when you look at specific options prices, maybe at the tails, way out of the money, you can generally find that these options are orders of magnitude more expensive on a regulated exchange with higher collateral requirements. Just because for a market maker, we all price it in. We're not stupid. It costs a lot more capital to sell these options and to lock up the collateral. And so you're going to find the options prices are going to differ, significantly versus the Deribit, for many of these options. So a lot of it is regulated, determined by the regulations and the type of customers and the market makers that can kind of straddle both markets, which makes it interesting because it becomes a cost capital game. And if you can get cheaper capital, then you can actually take advantage of this. But these are some of the dynamics that I've seen in the markets.
Thank you, Shiliang. As the biggest option exchange, Shaun, what do you think?
Yeah, so I think, well, I like to call it self-regulated exchanges, and I think the regulated exchanges will have a big kind of part to play, especially in kind of the institutional adoption of crypto, and it will just grow the pie. So already there has been a lot of institutional adoption into the self-regulated exchanges. I mean, people can't ignore the kind of volumes and the potential to make money on these exchanges. So it's kind of that. It's also a bit of an oxymoron, because I mean, the whole crypto kind of thing came out of as a decentralized kind of currency, and now you've got all this regulation kind of coming in that is kind of looking maybe to stifle it in certain parts. But I think what is important to note is why kind of regulation is important for firms that are not yet involved in crypto, like firms that are very capable of just plugging and playing their current systems and, yeah, really taking advantage of these kind of price movements that we see in crypto. I mean, that is kind of related to that infrastructure that is around the regulated exchanges like the CME, like your clearing services, but it also comes down to trust. So we see a lot of, I mean, I think there will be a kind of a big period of consolidation between these self-regulated exchanges, and those that have been in it for their kind of short-term gain, that have maybe done some practices that are a bit dodgy, they will kind of start to fade away as people realize, okay, these are the exchanges that you can trust. And that's like where Deribit like take a big kind of role in, okay, we kind of self-regulate, we like administer kind of very important practices. We don't market maker on our exchange, like simple things like that, that go a long way in getting the trust of retail and institutions.
Mm-hmm. So it was quite funny the other day. I read from Twitter. So it was kind of like why is volatility higher on the weekend because CME is closed? I think it's kind of like a joke but fact as well. So why is CME options starting to gain some traction starting in May? I think maybe like Shiliang also you have something to share with us.
Yeah, I mean, we've definitely seen a ton more adoption just in the CME, right? I mean, as we all know, early in the year with kind of Paul Tudor Jones getting to, into Bitcoin, obviously his exposure is not, directly into physical Bitcoin spot on, self-regulated exchanges. It's on kind of a derivative, so exposure through the CME futures. And then in the option space, we've seen a new large institutional asset manager get into the space, without doxing and naming the asset manager, but it's a multi-billion-dollar asset manager. And so, just from this one asset manager, we've seen huge ripple effects. I mean, on some days, CME has made up over 20% of the overall volume, right? And so, kind of to back up to Shaun's point, I mean, it makes a ton of sense that as these large institutions get into the space, they'll probably go on these regulated exchanges, right? And so the implications are big, because now just imagine if we have 5 or 10 of these multi-billion-dollar institutions get into the space someday. If one institution is already having this huge effect on the market, when 5, 10 or more get into the space, it's going to overwhelm the current market, right? And so I think it has huge implications, and I'm quite bullish on the institutional growth and the regulated exchange volume growth in the space.
Mm-hmm. Talking of the institutional growth, I think unlike typical spot or future exchanges, option exchanges are kind of more like it's driven by institution. And how's the institutional adoption of crypto? Shaun, would you like to share with us?
Yeah, so this kind of, obviously institutions want to be involved in where they can like have tighter prices and so on, but infrastructure of kind of trust and easy access to clearing, easy kind of plug and play, and easy connectivity to exchanges, that kind of all plays a part, and that infrastructure is growing. I mean, it really, like if their clearing providers are not yet willing to provide services for crypto or crypto derivatives, then it's going to be tougher for them to get in, the ones who have been like a bit skeptical of your self-regulated exchanges. But what will happen is they cannot ignore it any longer. It is like, it's not this, obviously not this bad. It's here to stay. It is a kind of valuable asset in its own right. I mean, people think of it now also like as a fear gauge to the traditional markets. It has its place in that interest, in that whole ecosystem. So what I think will happen is like these exchanges like CME will bring in this these trading firms that have not been involved yet, these hedge funds and so on, asset management firms. And once they're in, I think the CME will be a gateway into these kind of, and they get more comfortable in trading crypto, well, they're going to want to kind of arbitrage or get more liquid prices. I mean, we already see it. People trading CME volatility versus Deribit volatilities. It's kind of just going to be a natural extension that some of those will come into the self-regulated world. So it's a great thing, like the adoption, the institutional adoption of crypto. I mean, one thing that is kind of also very important in this to factor in is the kind of retail aspect. And that is where I guess an exchange like Deribit can really like have a much bigger edge than CME, because it's kind of, I mean, even for market makers, it's really a symbiotic relationship. The retail and the market makers together, they really need to feed off each other, and one can't really exist without the other. So yeah, being like one of the most liquid in options with the most volumes, it kind of puts Deribit in a great place with the introduction of these exchanges like CME.
Mm-hmm. I think BitMEX is also quite institutional focused, and George cares like regulations a lot as well. So George, do you have anything to share with us?
Yes, I believe institution adoption is a necessary step for any financial market. It's just a natural step for, if you see any financial market in their development, institution adoption is a very necessary step and part of it. So in the crypto, we start to see a big part of institution adoption starting from all the way back to 2017. The reason that institution is lagging behind is always, like people said, regulation is always one side, and on the other side, I would say market size another. For those major, including several Wall Street investment banks and hedge funds, get prepared for the market, because we got a lot of assignment in the marketplace. Regulated exchange and unregulated exchange, they definitely serve different segmentation of the client purpose. So one is more institution focused, one is more retail focused, and the regulated exchange, they kind of have a more higher entry bar, and the pricing dynamics are different. So I think they will very much complement to each other. But like people said, regulatory exchange is the first step for big institutions to enter the space, because one is they have to be regulated. I mean, security is another issue, but exchange to some extent is always self-regulated. Even NYSE, even Nasdaq, I see it as an extension of SEC. So eventually, both segments will coexist and complement to each other. I do see a lot of development on both space. For example, I see Korean government is preparing for a new law regarding derivative trading. US, of course, has made a lot of effort in the past 2 years on regulated crypto market. So I do see both segments are developing at a very fast pace. I would see in the near future, in the foreseeable near future, I would see more and more institutions will adopt to the crypto space. And given the current market condition, it will bring lots of new energy and new money flows into this space. Overall, it's a very good thing.
Thank you, George. Leo, do you have anything to add here?
Yeah, actually, I traded on both regulated and regulated exchanges. I think regulations definitely earn its advantage over unregulated ones because they are custody solutions, that they are clearing services. Of course, those has been very well tested during very volatile market times. But like Shiliang said, I still believe it's a much easier process to get for like a new trader to get started on unregulated ones, because the KYC process is a lot more streamlined and easy to accomplish. And you don't have to have a clearing broker to trade on on say OKEX or BMAX, right? And also I think the volume pickup during May in Q2 also has something to do with the Bitcoin halving, because during that time the markets was really hyped up because we were moving toward halving time. And also actually, if you I think that our memory is still quite fresh. We had a massive sell-off in March, and we were having like a similarly V-shaped recovery during the April, May, during the whole Q2 time. So that was a time when the global assets, including everything, has been like recovering like a big time. So that's why investors were like desperately looking for assets to buy, because as central banks were pumping all this liquidity to this whole financial system. I think that definitely had impacted Bitcoin quite a little bit. For institutional adoption of crypto, I think we gotta talk about Grayscale, Fidelity, Bloomberg, those kind of institutions. Like for example, the Grayscale Bitcoin Trust, it has been providing, you know, a compliant traditional investment vehicle for those large institutions to get involved in the crypto space. Because like pension funds or some other money managers, they couldn't just trade on unregulated or self-regulated exchanges because they are not allowed to. But with Grayscale and also Fidelity, they launched their custody service and also buy sell Bitcoin execution services in 2019, early 2019, for their institutional investors. So that definitely also helps them to have to gain more access to this space. And also like Bloomberg, even when I was in the traditional space, Bloomberg started their coverage, you know, as the world's largest financial media, data and news company. They had their own team to report on Bitcoin and also the market moves, and also they publish primer like regularly. I think those are all contributed, you know, significantly in the last couple of years to, you know, to educate the whole world about cryptocurrencies and about blockchain, and also how it can really change, you know, finance or, you know, the whole system.
Thank you, guys. And so next, moving on to our next topic. So how some of the flow these days on Deribit are driven by structured OTC products in the background. So maybe we can talk about some of these structures. And I know, Leo, you are actually quite familiar with the popular structured products. And maybe you can talk to us a bit about it.
Yeah, sure. I think this last couple of years, Bitcoin has been making quite some progress in becoming a more like a trading asset instead of just like a speculation tool, you know, before, you know, during the ICO time or even before that. And also for IBG, as one of the earliest players in the crypto space, we started to see more and more asset management demands from our retail and institutional clients. So they had a great, they have many requests. They come to us, say, okay, how do I do the treasury management? So that's a very common question when we were working with token projects or some other crypto funds or even media platforms. So that's why we kind of launched our financial services, like, you know, like these structured OTC products early, like mid 2019. Those have been very well received. We've been transacting, like this year, we've been transacting tens of millions these products every month, and I think it helps the clients to gain, like miners or crypto products. They were sitting on tons of cryptocurrencies while not gaining anything, and we have been providing these products to them for them to gain like a fixed income return or some structured return on holding on these products. I think I can go really deep here on specific structures, but maybe I'd rather let other guests. We can talk about something in general first, and maybe we want to go deeper. We can dive deeper then.
Sure, thank you. I think Shiliang also has something to share with us.
Yeah, I mean, these a lot of these products have existed in traditional assets for many years, right? Especially in Asia, right? I think yield generation products, especially in the index products in traditional assets. Let's say like from the downside, out of the Hong Kong markets have been immensely popular, and so I think we're just seeing a translation and application of that to the crypto markets, right? A lot of the same parties or general audience. Obviously, a lot of the volume in crypto comes from Asia, and so I think many people are already very, very familiar with these products, and so they see it, crypto and these products as a natural extension of what's existed for many, many years. And so a lot of the products that you see obviously are yield generation products, products that can earn 10, 15, 20+% annualized. Many of these are structured products, and so as a dealer, if you're kind of creating markets for these, you need to hedge, on the back end, and so you have to basically hedge in liquid markets, on the Deribits and the CMEs and LedgerX's and the other exchanges of the world. And so you're seeing a lot of this flow that's in OTC markets leak onto the liquid, exchange markets, right? And so I think, we've seen some of this already play a pretty big effect on, vol markets. I think most of it is yield generation, and so a lot of it is basically just selling options, right? And so I think we've seen in June, July, more so than recently, just a ton of vol selling, which has kind of suppressed a lot of the implied volatility vol surfaces, in let's say Bitcoin or Ethereum, especially on way out of the money options. And so it's had a pretty interesting effect, because I think we've seen more supply than necessarily demand, just in terms of the vol flow. And so obviously that plays a huge implication.
Thank you, Shiliang. Shaun and George, do you have anything to add here?
Yeah, that's
Go
ahead.
No, I was just going to say, I mean, the growth of kind of structured OTC products is really kind of a signal for the maturing of the industry and how it's kind of starting to converge with your traditional markets and those what exists on traditional markets. Obviously, it is great because they like a lot of these, as Shiliang mentioned, people need to hedge out of these risks, and they will come to those liquid exchanges. So it's again, and these venues for people to trade OTC will ultimately lead to just a growth in the derivatives industry as a whole. So especially on the most liquid exchanges, and that's where it really helps exchanges like us. So,
George.
Yeah, I totally agree. I think it's a very positive sign for the entire crypto industry, because once you have the structured product, I mean, if the underlying market is not big enough, you won't have the structured product. I'm probably the only one who is audience to witness the 2008 financial crisis on Wall Street. I believe my first job was 2007. I was working with an asset management company. I was working on a structured desk. I was structured to working on CDO. Obviously, the reason that we have a financial crisis. I remember at that time, my job is to explain to people, to the investors, what is CDO, what is structured product. And there's one case, I remember, I mean, even 12 years, I still remember very clearly, is we are trying to sell CDO product to a pizza chain store owner. So the meeting was scheduled for an hour, and we spent 55 minutes talking about how do we expand his business, how can he deliver more pizza to our building. In the last 5 minutes, he just signed a deal. I mean, obviously, he doesn't understand what is structured product, but I mean, the rating agency, Fitch rating S&P, give it AAA rating and give it ridiculous high yield based on compared with other AAA asset. So to him, it's a steal, but later on, I feel really sorry for him because the entire market just crashed. I haven't seen that level of bubble in the crypto structured product yet, because by nature, structured product is not designed for a retail investor. It's designed for a credit investor. But however, in the crypto world, I would say the market is still very limited for the structured product. It still has a very long way to go. But I would say it's a very good thing to have structured product to complete another node of the ecosystem. And we do see in the past 2 years, the structured product market is growing at a very at the exponential speed. So going forward, I'm very bullish in this market. But however, I would say for any retail investor, because in the crypto world, the bar is lower compared with traditional finance. So it's very difficult to KYC. It's very difficult to claim we are credit investors. it's very difficult to enforce the risk management system. And also for investment advisor, it's very difficult to enforce any regulation on that. So basically, in the crypto finance products is easy access to retail investors compared with the traditional finance. So there's a lot of risk associated with that. I don't want to see another bubble on a structured product because it will be a disaster for the entire ecosystem. Yeah.
Thank you. I think we are all bullish on the market here. So I have a question for Shaun and George. What's the impact of the crypto derivatives on the crypto sport, Shaun?
Yeah, so this is I guess I would say quite an interesting topic. It's how kind of the growth of futures and actually the necessity of futures to come in to be able to short crypto has been important to actually not make it some sort of speculative bubble. So it's very important. Derivatives play a very important role in price discovery. And maybe it's no coincidence that CME launched Bitcoin futures, 2017, and shortly afterwards you had one of the Bitcoin crashes. You have the March crash that happened recently that was led by the futures, stemming from BitMEX in that case. And you can see how that can kind of drive really the crypto spot. Whether there will be like further relationships, like whether like interest in the options and trading in the options will be a leading indicator to where the future might be headed, remains to be seen. It is, I mean, it's not going to push the markets as such because the volume on the futures just dwarfs the option market. But it is a growing market, and I think it has a place as a leading indicator.
What do you think, George?
Well, I do think has the ability to short Bitcoin is actually a very good step to make the market more efficient. Financial instrument, you have the capability to short oil, you have the capability to short equity index, you have the capability to short gold, and nothing crashed. I mean, I don't think the future market, duration market is the reason why Bitcoin price crashed in the early space. I just think it just makes this market more efficient. I mean, we allow people from different views to vote using their own money, and you express their views on the market direction, which is a very good thing. It serves, it gives people more tools to hedge, to do OTC, to play with the market. And it's definitely a very good step to, again, to complete the entire ecosystem. So I think it's a very good thing. We do need that.
Thank you. I don't know if Leo and Shiliang have anything to add here. If not, then we're going to move to the next topic.
I can add a little bit. I think for it definitely crypto market sentiments of this overall crypto space. Like for myself, actually my PA and also the firm's account, I rely on multiple reference tools based on derivatives. Like on Skew, I regularly check the OI, outstanding OI on all exchanges, and also I check the funding rate for perpetual contracts, and also I check the spot future spread. I check in the option space, I check the put call ratio, also the skew. I rely on all of these measures for me to predict the next market moves. So that's why, and also actually during the March sell-off, because during Q1 the crypto space was highly leveraged, after all this lending, borrowing stuff, and that's why when we had this sell-off just started, that's why it kind of exploded, because those lenders, they had to liquidate the collateral, BTC collaterals on the spot exchanges, or also on futures. Since the markets were already highly leveraged, that's why it triggered even bigger sell-off. That's how we dropped like more than 50% in a day. So that's why actually, speaking of structured products, that's why actually a lot of lenders launched their structured lending product, where the borrowers can choose to buy a put option, which will protect their collateral below a certain liquidation price. So that's why I think a lot of these are definitely highly correlated, and everyone looking at this a lot these days to position for the markets.
Thank you, guys.
Yeah, that's why I have.
Thank you, guys. So I think crypto market changes too fast. 3 months feels like 3 years. The Ethereum OI got 6 times higher over the past 3 months, and Deribit representing 90% of it. And congratulations. And Shaun, I know you just newly joined Deribit, and you have been working on designing this Bitcoin index, volatility index. Would you like to introduce it to us a bit?
Yeah, so I guess for the viewers out there that don't know about the VIX in the traditional markets, the VIX plays this very important measure, again, of, it's also used sometimes as a fear gauge, or really kind of a signal to traders what is actually some crisis that's happening in the market. It is, so pretty much you're just, that value tells you quite a lot in itself. So everyone's telling you, oh yeah, crypto is moving around, but to actually have that kind of measure on what's the expected movement. I mean, we all know already the historical movement, but what are people expecting from right now? So just that figure tells you, okay, this is kind of this expected daily move, for example, that will occur in Bitcoin, Ethereum, and being one of the most liquid exchanges with the most volumes in the options, because the VIX is calculated, has to be calculated from the options. The options give you that implied volatility. And so we get a lot of requests on, okay, when are you doing a VIX? When are you doing a VIX? When are you doing a Bitcoin volatility, a VIX for Bitcoin? And so we are kind of, we have been thinking about it for a long time. I mean, one of the things we really believe in is quality over quantity. So if we do something, we do it kind of right. And we have started kind of preparations for this Bitcoin volatility index that will be using the 30-day kind of implied volatility, which we will measure from the options. So really looking forward to that. I mean, what sort of moniker it kind of gets will be interesting. What kind of measure that gets, because your traditional VIX is mostly about the downside. Like, we get high volatility in traditional markets as we move down. But in Bitcoin, we've also got a lot of potential spikes, potential jumps, like there's a lot of risk on the upside as well. So it is a very interesting product, and it'll allow, not only that, it'll allow the institutional traders, for one, to be able to hedge out their risk more easily that they get in the options, but even maybe more importantly for the retail side. So a lot of retail traders might think, okay, I'm trading options, I want to trade, options are about volatility, but a lot of the times they might use it actually as a delta play, like, okay, I want to buy a far upside call because I think there is a chance. It's in some way maybe a slight lottery ticket, but they don't want to be exposed to the downward movement as well. So that's why they won't buy a future and they buy an option. Whereas now, to actually buy volatility without the risk of delta is maybe a bit difficult. It is not as straightforward for a retail investor, or a retailer. So by having, let's say, futures on this Bitcoin volatility index, it will be much easier to speculate on, I believe there's going to be a big movement. I believe that the expected movement will grow or reduce, and so things like that come into play. So it's quite exciting.
So when are we going to see it live? In 2 weeks' time, or
I don't want to give any date on that. I would expect in the near future, for sure. I mean, we want to do it right. So first we'll introduce an index, and we'll get a lot of feedback from that and develop it so it's really kind of a robust product.
Thank you, guys. So thank you all. So now everyone, one very short sentence to end our show tonight. Maybe you can start with Shiliang.
Yeah, I think, just extremely excited for the derivative space, right? I mean, every other asset class derivatives trade, 10, 50, 100x the size of spot markets, and I think it's going to be no different in cryptocurrencies. Thank
you, George.
Yeah, I mean, derivative space is always the most exciting part of any type of trading. So from exchange perspective, I do want to see more regulation, put some space to better protect investors. But from the trader side of me, I'm also very excited to see how the market evolves. So hopefully more institutions can participate in and take advantage of the higher leverage of the product. and provide on the sales side to provide more service and financial product to their investors.
I think BMax is launching also more and more derivatives products as well. It's working on
Definitely.
that.
Yeah, we're looking forward to that. Yes, very soon.
Thank you. And what about you, Leo?
Yeah, I think it's a very exciting time to be in cryptos these days. I think the market can be really volatile. There's a lot of opportunities. I think that's also why a lot of our traders who came from traditional space to enter cryptos. Yeah, just excited to be here. Yeah, I think I hope to see. It's a great honor. I hope to see a lot more to come. On Deribit, and also more collaboration with Shiliang on products, and also the new products to be launched on BitMax.
Thank you, Shaun.
Yeah, so I guess there's not as much to add. Like I would say, as you the viewers get more interested in crypto, it's not anymore. Let's say about just, oh, we're going to the moon. It's really about, there's a lot of opportunities, whether Bitcoin is going down or up, or you want to speculate, buy straddles. Like options also give you so much more possibilities, and so much more possibilities without like so much exposure as well. So yeah, very exciting times. I can't wait to see what the next 6 months bring.
I noticed that your traders are all too humble. Nobody mentioned like all eyes on 20K. So my sentence is going to be like eyes on 20K end of this year. Thank you, guys. Thank you, and
Thank you.
Our fantastic guests. And now go trading. New York Times just started. Thank you, guys. Good night from Beijing.
Thank you. Thanks.
Thanks, Emma. Thanks.
Bye.
Thanks, Emma.
Bye bye.
Take care. Bye.